What a bloody week in the market. I know there's a lot of people out there panicking and trying to tell you the sky is falling and it's the end of the world and all of this. But what I'm going to do in this video, just like we do every week, is we are going to dispassionately and unemotionally go through the markets, see what's actually happening, see where pockets of strength may be lying, so that whenever the market turns, we have a shopping list. We know where to look when the market starts to bounce. The way I trade, this is the time to do a lot of work because my algorithms are going to spit out ideas every week, come hell or high water. It's going to be a fresh batch of symbols to take a look at. If you're interested in these algorithms that, again, are backtested up till 1980 until now to prove some relative outperformance of the market, go to statsedtrading.com, look in the comment description or the description below, the comment section, wherever you're seeing this, it'll be somewhere, but statsedtrading.com. Sign up for StatsEdge Pro. Again, the algorithms are running right now on my computer as we speak. They will output a whole bunch of symbols that will get sent out on the weekend to StatsEdge Pro members, and we will go through those symbols. But now what I want to do is I want to look at the entire market to see where I potentially could enter a trade, because the way trading works for me personally is my goal is to own a lot of things when the market's in a solid uptrend, because I want to be riding that wave of profit. I'm always trailing my stop up as things go. So when there's a reversal like this, I get stopped out of a lot of things, which is what happened this week. So I am in a lot of cash, which means two things. One, if the market's going to continue, I'm okay. I'll probably get stopped out on some more, raise some more cash. Fine, just part of the game. If the market turns, it means I have a lot of cash to deploy. So I need to make sure that I've got an understanding of where pockets of strength lie in the market so that when and if and when this reversal in the market occurs, then I have the ability to deploy that from the names that have been outputted in my algorithms. So without further ado, let's just hop right into it. And as always, we would be remiss without starting with Bitcoin, as that had a bit of a bad week as well. So just remove this. I've got some trend lines in there. So we're talking when I did my monthly review about how there was a bit of a bull flag going on here. If you missed that, it's on the channel. You can go back. It should be the video before this where we went over all of the monthly charts. And the reason we do that is we zoom out because, again, our job is to have a completely dispassionate, unemotional view of the market and then wait for our moments to strike. Now, looking here on the weekly chart, nothing's changed. Yes, we've had a couple bad days, but we are still in this range right here, which to me looks like a bit of a bull flag. And until this resolves one way or the other, that's what I'm going to retreat it. If we break down and we hold below this for a period of time, then it's probably time to be short or in cash. If it breaks out, it's probably time to be long. It's just not a time for me to really do much. Now, if you zoom into the daily chart, however, it is interesting. We are down to where this, let's draw this in here, this anchored VWAP from somewhere around this area. We've overshot it a little bit. If we close too far below it, we've got 2 hours and then some into the end of the day. If we close too far below it, then that's the way it works. Nothing to see here. I do have this trend line here as well. So, call it 63,000 to 61,000. I'm interested if we start to bounce here, maybe a shorter term dip buy. But again, for the weekly chart, the longer term chart, we just need to see some resolution above 70,000. It needs to get above there. It needs to hold above there. And then it needs to push higher. Now, if we take a look at Ethereum, it's more of the same, right? The monthly chart talked about this bull flag. I know it looks awful, but this is why we zoom out every week and we look at these long-term charts. Being someone who watches the market throughout the day, I know there was a lot of panic out there, but if we zoom out, it's not really that big of a deal, right? We're down a little bit on these particular markets. Solana, I want to take a look at Solana is a good way to look at the alts. Same thing, right? We're still well above these prior lows right here. That's actually the Solana market cap. So let's do the price. It's not much different, of course, but right here, this is the 127 is the support area. We're still well above that. We're still doing absolutely fine. Solana, the anchored VWAP from the all-time high is way back here. So again, there's nothing really for me to care too much about when I'm looking at crypto. Small pullback. If we go into the dollar had a nice sell-off this week. Now, if you go back in my videos, I was talking a lot in the prior years about how there was this inverse relationship between dollar up, stocks down, dollar up. So that's kind of the way it was happening. That seems to be gone because we've had stocks down and we've had the dollars down. So that correlation has broken, at least for now. So we're just going to treat it as broken until that comes back. But a nice push down in the dollar. We still have a lot of room to go to this kind of 101.2 area, which is the prior support. So it wouldn't shock me to see a push down. You know, we were talking about this wedge that was happening right here for the longest time. That wedge resolved lower. Again, it doesn't really shock me. Now, USD franc, however, that's a bloody candle right here in the franc. It's been a nice downtrend, but when it broke that this week, we had a push down. So any sort of weak bounce that I see here on the franc, USD franc next week, that to me is going to be a shortable bounce. So I'm going to watch that one right there. When it comes to the euro, it's going to look a little bit the opposite. Euro USD. Little bit of a breakout here, right? I had this wedge going on, and that wedge, just so you know, that's from the daily chart, right? Downtrend and then the uptrend here. We had a nice break on that, and you can see that with euro pound, that had a wicked move as well. So we do have some strength in the euro. We've got some weakness in the dollar. And then if we look at the yen is just continuing to fall apart. You can see that I have this area right here where I've drawn this line on the yen right in here, right there. And we just sliced that just like hot knife through butter, just continuing lower here on the yen. And it was going to happen, right? I've been talking about this for some time, in which we've been talking about this yen for a long period of time. This prior resistance right here, we broke through that. And then we talked about how the Bank of Japan just flat out said, we are going to start to defend our currency. We're just going to do it. We're not going to let you sell off the currency forever. Some people decided to ignore a major central bank. I don't know why. So this trend is absolutely makes perfect sense. Any kind of bounce I can see here that is a shortable bounce, I'm definitely going to look to short this because I want to be on the side of the large central bank. It just seems to be something that makes a lot of sense. You know, we say in America, don't fight the Fed. Why would we fight a large central bank as well? So that, again, continues to make a lot of sense. To the downside, any sort of bounce. We can look at this in any currency and you'll see the same thing, right? We have pound yen, we have euro yen, we have Aussie yen, right? It's just the yen. The Bank of Japan has said enough. If you guys sell our currency, we're going to buy it. So I'm not going to fight a bank. So any bounce we get, I'm marking levels on shorter term time frames. I'm having alerts sent to me, and I'm going to join the bank as it shorts that. Now into the stock market, and we have to always start with the SPY here. Again, a bad week, but really, is it? Yes. So everyone's kind of freaking out these last 2 days. Yes, this was a negative day, and we gapped down a little bit today. We'll put in a nice bottoming tail. I'm not freaking out here, right? We have prior resistance right here. This was a breakout zone. Makes sense that we come back and test it. We have this high right here. Wouldn't shock me. Maybe we bleed a little bit lower to hit these prior highs right here. All of this is perfectly normal to me and exactly what I would expect to see in a healthy market. You have to remember, the same people who were freaking out here saying that this was the end of the world were probably freaking out here saying this was the end of the world, and probably freaking out here saying this was the end of the world. At some point, the trend changes. And one of my favorite quotes is from Peter Lynch, who says there was more money lost trying to predict the bear market than actually in the bear market. We have systems in place. In Stats Edge Pro, I have systems in place that will tell me, stop trading the system for a little bit and then turn it back on again. There will be some drawdown from the top of the equity curve. It's just the way things go, right? It's what we do as systematic traders. So our job is to say, okay, well, where is the strength? So let's take a look at the RSP. I talk about this all the time. This is the equal weighted version of the S&P 500. Barely back into this wedge that it broke out of. And a nice bottoming tail, nice topping tail. If you're looking at the RSP or the average stock, let's just say this ETF represents what the average stock is doing. The average stock is still kind of in a range, in the high end of its range, and had a bit of an indecisive week, but not nearly the end of the world. Now, this weakness is coming from semis, right? We look at SMH. SMH is bleeding for sure. 3 down weeks in a row, ugly, ugly weeks. But zoom out, right? Zoom out from this low right here. Yes, we hit a high and we're going to pull down from it. Maybe we have some support here at 200. Maybe it goes all the way back to 150 where it broke out of. Right? That's levels not seen since the beginning of the year. It certainly could happen. I don't think that will be the end of the world. If it does, it's just the way markets work. They go up and then eventually they pull back. And this is just what we're seeing. So what we want to start doing is we want to start saying, okay, where are the sectors that are not pulling back, right? Say we come down and we hit this anchored VWAP on the semis and we start to push higher. That will probably lift the rest of the market. So our job is to go in and say, okay, what sectors are looking good? Now there's bonds that are up, but that makes sense. Bonds are a safe haven, so if bonds go up, again, it makes perfect sense when markets are going down. And then on top of bonds, we could also just say, what about XLU? So our utilities. That also makes sense. Utilities are a defensive asset. The argument is you always need water. You always need power. You need these things anyway. So XLU, again, makes absolutely perfect sense that that's up. Now, some areas that are interesting as well is something like regional banks. Regional banks, if you guys remember at the beginning of the year, were going to be the thing that brought the whole stock market down. Now, yes, we had an ugly week in regional banks, but we're right down to the breakout point. So if I go into the daily chart right here and I see this, yes, we are looking like we're pushing lower. But if we hold this zone right here and we can hold that zone, then that's something that could make a little reversal area in which we hold this area and start to push higher. So yes, this dip is harsh. However, we're at a very interesting area on the weekly chart. Now, if we go down into a couple of them that look actually strong, we have TAN or solar, not down, overall, obviously weak, right? We're not anywhere near all-time highs. It hasn't participated much in the overall uptrend, but we didn't break down in solar in the same way that we did in other indexes. So we're holding these lows right here on solar, which again represent these prior highs right here. So if we're going to see a rotation, and we're going to see a rotation into solar and into green energy, then we have a pretty clear play, in my opinion. We've got some equal highs right here. We got 3 equal highs in solar. If we can break that, then you just go to your favorite solar stock. You can pick some of that up. If solar right here ends up breaking down, then it's time to go. And these are the kind of plays that I love when the market is selling. What is at support and holding, those are going to be the plays that I'm going to watch going forward. XLV, I made a joke that people are still going to have heart attacks on Twitter. We broke these prior all-time highs. We held here. We were flat on the day if we go into the daily chart, and actually up a little bit on the week. So that's fantastic. So find your favorite healthcare stock, take a look at that there as well. And last but not least is FXI, and I'm going to draw a little anchored VWAP right here. FXI is coming down and touching the anchored VWAP from this low. So this represents large cap Chinese stocks. Now, might be a place people, maybe if the dollar is getting cheaper, maybe people are going to offshore their money. And if they're going to do that, then maybe this pullback in FXI that looks like a nice orderly controlled pullback on lower volume, that might be something that I'm going to take a look at. So I do, again, all of this so that when I'm running my algos and when those algos are being output to my users of StatsEdge Pro, then I've done all this research, right? I put all of these alerts into trade ideas and they're going to alert me when things move. And until then, I'm just kind of in wait and see mode. So just to go back to what I was saying at the top of the video, I see a lot of people freaking out there. Could this be the start of a big bear market? Could. Is that likely? No. There's always way more bull markets than bear. The last thing I wanted to bring up is election seasonality. Now, let me actually see if I can find this live. Election stock seasonality. Now, this is something that is covered a lot by all-star charts. It's covered a lot by a lot of different names out there, and it shows kind of exactly what we expect to see. Yeah, this is a good one here. We can just bring in the SPY chart. So what generally happens as we go into elections is exactly what we're seeing. So this is no new thing. Okay, we can go out to, we can actually just zoom back and look at the last time. We go back to 2016 in this area. So this was one of the last elections. We'll ignore 2020 because that was craziness. Everything goes absolutely haywire in 2016 until about November, when everything is decided. That's not saying that's going to happen every time, but that's common. 2016, 2020, 2020, 2024, they could all be different. But what we see very commonly when it comes to how elections affect the market is that from the summer of the election year all the way until the election is over and everything's counted and everything's decided, you see chop. And a lot of that just has to do with what administration, what regime are we moving into, what could be policies of them. I hate the term that market hates uncertainty because there's always uncertainty, but that is part of it. When the market doesn't know who's going to be running the ship next, it gets a little bit choppy. I expect that this could be the exact same thing. We could be seeing this choppy mess as we go into the election season. So what does that mean? Well, at StatsEdge Pro, we have two algorithms. We have a breakout trend following algorithm, and then we have a pullback algorithm. My job the discretion that I add to my systematic trading is to try to figure out what regime we're going into. If we are getting into a bit of a choppy market until the election season, until the end of the year, that's fine. I'm going to lead heavier on the pullback algorithm and maybe a little bit less on the trend following algorithm. So where maybe I would weight them the same and take the same risk on each one, I'm personally, based off the research that I've shown you here, for the next little bit anyway, I'm really going to weight that pullback algorithm much higher because I want to make sure that I'm getting these dips, right? If the market's going to dip, I want to be buying in that area with a clearly defined stop loss. And then if the market turns, again, I'll have that full portfolio that I talked about at the beginning. So sometimes we're purely trend followers, sometimes we're pullback traders. What I'm seeing in the market makes me think that it might be time for a little bit of pullback action. But as always, do your own research. If you like this content, thank you for coming by. Please come on over to statsedgetrading.com and I'll see you there.